Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories we are following in the BNN Bloomberg newsroom. Prime Minister Mark Carney says the Canada-US-Mexico trade agreement involves a subset of issues that require a much bigger discussion. In a news conference, Carney said he's set out broad CUSMA parameters in a meeting with U.S. President Donald Trump and Mexican President Claudia Sheinbaum. Carney also reiterated that he will pursue an agreement in the best interests of Canadians.
We've been clear about our approach to supply management. We continue to stand by that. We'll continue to protect supply management. And we continue to see tremendous benefits, first and foremost for Canada, but very much for the United States, of pooling resources where possible in the auto sector, in the steel sector, in the aluminum sector, in the lumber for forest products. And we will enter those discussions on the review of CUSMA in that spirit.
The federal government, meanwhile, has signed a deal with Ontario to remove duplication in environmental assessments. Prime Minister Mark Carney and Ontario Premier Doug Ford signed the agreement to accelerate major projects, bringing them under a one project, one review approach. The agreement will also help unlock the Ring of Fire, a minerals-rich region in northern Ontario. Ottawa has been pushing to develop resources and build projects more quickly. Shares of BRP are under pressure today, off about 4.5% right now. The maker of recreational all-terrain vehicles says it is now reviewing options after Australia's competition regulator blocked its planned sale of Telwater to Yamaha. Australia is citing competition concerns in the country's boat engine market. BRP says it will continue to operate the Telwater business and doesn't expect the decision to have any impact on 2026 guidance. And it looks like the TSX will end that losing streak. It is up right now. It's cooled off a little bit, but it's still up by 0.8% today. Most of this reaction coming from the news south of the border when it comes to inflation. And in New York, similar situation, everything in the green right now on those inflation numbers that were better than expected. S&P 500 up a point, Dow Jones 0.34%, and the NASDAQ is up 1.66. It was up almost 2% at one point. All right, let's take a look at the biggest themes in the markets this year and get an outlook on what to track for the year ahead. We are joined by Nate Tuft, CIO and Senior Portfolio Manager at Manulife Investment Management. Nate, thanks as always for joining us. As we look ahead, what things from 2025 are we going to be bringing in to the new year?
I think the first thing about 2025 is that for 2026, we're looking for what is the next catalyst. This year, we had a number of drivers that ended up making the markets a bit better than I think a lot of expectations were early in the year. Notably, we saw tariff dynamics better than expected. We had some very significant concerns earlier in the year, and they ultimately ended up being better than expected, as in not as bad or as high. Two, we had a central bank that's been cutting across the globe, both in the United States, but also global central banks. And three, resilient growth. We've seen growth hold up pretty well, including the growth of AI. My concern is that looking into 2026 is the market is looking for what is the next catalyst, because these known catalysts are pretty much priced into the market. The market knows about central bank cutting. The market knows about AI spending. The market knows about the fact that tariffs aren't as high as they could have been earlier last year. So this year is going to be a bit more challenging, in my view, from the perspective of those drivers, because we're looking for new catalysts versus what we had as a positive throughout 2025.
Could inflation be it? I mean, the numbers we saw today, could that be the driver that kickstarts it?
We're actually more concerned about inflation in the opposite direction. Yes, I do think the base case is that inflation is in a reasonable zone. So the Fed will be okay with inflation in this 2.5% to low 3% number. So as long as it stays there, I think you still have a Fed that becomes very accommodative. And we would argue that the risk or the opportunity is the Fed actually might cut more than expected. So that could be a positive catalyst. Right now, the market is pricing in roughly 2 quarter-point cuts next year, where we think it's very likely we'll see 3 quarter-point cuts, if not potentially more, with the right makeup of the Fed, particularly after Powell is no longer chair of the Fed. So there is one catalyst there that we could actually see greater accommodation from central banks, particularly from the Fed, which would help risk assets.
And what would that makeup be with the Fed?
So no one knows, obviously. Obviously, we're going to get a new chair.
But what would you like to see, though? What would you like to see? Or what would you?
What we would like to
cuts?
see is that one of the existing candidates that's on the table actually gets it, because all of those candidates, in my view, are qualified for the job. Yes, we can all debate about the nuances of who might be better or worse, but they're qualified for the job. And I think that sets the standard that the Fed will maintain a level of independence, and they will be able to have articulate arguments. Even if they have arguments that are more for more cuts, it will still be in the vein of what the Fed should be doing and focused on when it comes to inflation, when it comes to growth, when it comes to jobs. And so I am still of the view that the Fed will come across as an independent agency. They won't be outright biased by broader dynamics. And the candidates that are in play for the chair are okay. The bigger question, though, is who will be the other members of the Fed and how dovish will they be? And will the Fed actually start arguing about a lower neutral rate, which will help justify further cuts beyond what currently is expected by the market?
And how much of a factor do you feel the Trump factor is when it comes to the Fed? We've heard him call and call and call again for cuts. Is that a big pressure, or are they going to maintain that separation?
The administration is allowed to have a view on this. Now, do I think the Fed is just going to take that view and implement it? No, I don't. I do strongly believe, and the candidates that are on the table today for the chairmanship will maintain a level of autonomy, and they will focus on the drivers that I previously mentioned. So while the administration is not going to be shy about vocalizing their views, I don't think you're going to have a Fed that's going to be overly swayed and basically follow the direction of administration. They have a job, and the job is very clear as it pertains to what they should be focused on. That does still afford them, though, some nuance around what do they want to focus on more. If the Fed focuses more on growth concerns and job concerns, which are a bit more challenging, that will allow them to do more cuts. If they're more focused on inflation, however, that's the opposite effect. It will be fewer cuts. And I think we're in a position where the Fed will basically argue that inflation's in an okay spot. It might be a bit high, but we can point to transitory type of effects such as tariffs driving that. Shelter inflation is certainly coming down as an offset, and they'll be able to afford them to focus on the things that are more problematic, such as the slowing job dynamics and growth not being as strong as it could be.
Okay, with AI, we've seen some rotation. Do you see that continuing into the new year?
One of the things that I think is going to be a positive theme for next year is while we've had some very strong performance for certain momentum names this year, and arguably in some cases lower quality and lower earnings type of names, except for the Meg 7, which are obviously great performers and great earners. But I do think we can have an opportunity to see broader participation in the market next year. And I think there'll be a much greater appreciation for quality next year. This year, in 2025, quality as a factor and as a driver of stock performance has been very, very weak. And so high quality companies have actually underperformed, and consistent earnings, high free cash flow companies have underperformed. I think next year we'll start to see more appreciation for those types of companies, which is allowing us to gravitate a bit more to areas like healthcare as an example, stick with some of the high quality tech names, look for high quality opportunities in the consumer and industrial space. So I do think there's an opportunity for broader participation rather than just relying on the momentum names that have driven us in 2025.
Okay, we're going to have to wrap it up there. I wanted to get into fixed income, but we are out of time. Nate, thanks as always for joining us.
Thanks for having me.
And Nate Tufte, CIO and Senior Portfolio Manager at Manulife Investment Management. Up next, Lululemon is about to see massive change for the new year as the company's CEO steps down and an advocacy firm steps in. And more on that next. Morningstar reports today that Elliott Management has racked up more than $1 billion US in Lululemon right at the time when CEO Calvin McDonald is stepping down. So what does this mean for the athleisure brand? Well, we got more on this from David Swartz earlier. He's the equity analyst at Morningstar.
Just last week, we were told that Calvin McDonald would be leaving the company at the end of January, and there was no succession plan in place. The company will be led by co-CEOs in the interim. But yes, as you mentioned this morning, we heard that Elliott, an activist hedge fund, which has been involved in other activist campaigns against companies like Southwest Airlines, has taken a large stake in Lululemon and has apparently been working with Jane Nielsen, who's a former CFO at Ralph Lauren, and before that at Coach, where she was very successful in turning both of those brands around. And apparently she may be a candidate to be the CEO of Lululemon after McDonald leaves. She would be a very strong candidate for CEO, given her success at both Coach and Ralph Lauren, two brands that were in worse shape than Lululemon is. But both of them have had tremendous turnarounds, and she was certainly part of that. Not the only person, of course, but she successfully reduced distribution of both of those brands and improved their brand health and their pricing. Ralph Lauren especially has been very successful over the last few years, whereas a few years ago it was actually in pretty poor shape.
A couple of questions. First up, with Elliott, how much sway would they have on being able to bring in a CEO that they would like to see? If this is true, of course, if this is actually the case, that they do have that $1 billion.
At this point, Elliott doesn't own enough stock to just demand a new CEO, so it would have to be approved by Lululemon's board. There's no indication at this point that Elliott is planning a proxy fight or anything like that, which would be very costly and time-consuming. There's also the issue that Chip Wilson, the founder of Lululemon, has also been vocal lately, which is nothing new from him. But he filed an updated 13D a few days ago, suggesting that he wanted to be involved in the CEO process as well. Whether that means he wants to go back to Lululemon or not, I don't know. I don't think so. For one thing, he's a big shareholder in Amer Sports, which could be considered a competitor to Lululemon. But Chip Wilson also seems to want to be involved in the CEO process. It looks like Elliott does as well. And I think the board would be very open to hiring Jane Nielsen if that is the choice, because of her strong background at Ralph Lauren and Coach. And before that, she was at PepsiCo.
I mean, today this is good for the stock. I'm looking; it's up about 5.6% almost. But will this be good a little longer, short term, and long term? If we see some battles shaping up between Wilson and Elliott, or any controversy with that?
I don't think that would be a good thing for Lululemon. Those fights are very expensive. I'm sure a lot of people remember the one at Gildan last year, which cost tens of millions of dollars. It did ultimately result in the CEO and founder coming back to the company, Glenn Chimandi, but it was very contentious for a long time. I don't think Lululemon wants something like that to happen. It's really not necessary at Lululemon, because Lululemon is still a strong company. It's just had some slowing growth in the U.S. and Canada recently, and that's been a concern for investors. And there have been some product issues, but I still think the Lululemon brand is very strong. This is a company that generates huge cash flow, is buying back a lot of stock, and I think the stock is undervalued. My fair value estimate is $295 a share. So I think Lululemon will be fine. There isn't anything really broken at the company. I still think the brand is very popular. And so I don't think there's any need for some contentious activist fight.
And if Nielsen were to come in as a CEO, what direction would you see her wanting to take it? Would she go high, like even higher end than Lululemon's kind of perceived as?
That's very possible. Certainly, some of their competitors, have thought about doing that to some degree. Alo Yoga seems to want to be more of a luxury brand more than an athleisure brand. They've been releasing handbags that cost several $1,000s. Lululemon could do more of that, but really, I think Lululemon is going to become more of a mainstream sportswear brand. There is an opportunity in sports like golf and tennis where Lululemon has introduced some products, but it's still relatively early. And Lululemon has also made some moves into sponsoring athletes as traditional sportswear companies like Nike and Adidas do. And I could see Lululemon, becoming a bigger player in sportswear. There's also the footwear market, which Lululemon has got involved in a little bit, but it's still very small. But that's a big potential opportunity for the company. So I still think there's a lot of growth opportunities for Lululemon, both in sportswear, but maybe also in luxury too.
And that was David Swartz, equity analyst at Morningstar. Up next, we'll go over the proposed federal regulations on stablecoins and what they'll mean for your portfolio. We'll have more on that after the break. Canada's proposed Stablecoin Act marks the biggest shift in digital asset policy since 2019. It promises to bring some clarity to cryptocurrency's murky waters. But what does this mean for you heading into 2026 in your portfolio? For more on this, we're joined by Adam Gerritsen, leader of the Blockchain and Digital Assets Group and a partner at Gowling WLG. And thank you, as always, Adam, for joining us.
Thank you very much. It's great to be back.
Where do we stand heading into 2020? Wasn't sure what year it was. Heading into 2026, what's different for stablecoins compared to when we walked into 2025?
Yeah, thanks. So we've seen a marked shift in stablecoin legislation over the course of the year, primarily in November with the release of the draft Stablecoin Act. So the Stablecoin Act was released by the federal government as part of its budget efforts towards the end of the year. Really what the Stablecoin Act does is set out a framework for issuers of the asset. So for those who may not know, stablecoins are a digital asset that's based on blockchain technology. But unlike Bitcoin and other speculative digital assets, stablecoins are designed to hold their value effectively as one-to-one with the Canadian dollar. So the idea behind a stablecoin is that it's not a speculative investment vehicle, rather it's a store of value that really functions more like cash. In 2025 and prior thereto, we've had regulation with respect to stablecoins, primarily from Canadian securities regulators. So this Stablecoin Act is really the first significant move by the federal government to bring Canada deeper into the global digital markets.
And do we know what it will hope to do? What does it hope to attempt to do? I saw that it wants to be pegged to the bank. Stablecoins have to be backed by reserves. That we heard that from the governor, Tiff Macklem, the Bank of Canada governor, yesterday, talking about that. Is that where they're heading with it?
Yeah, that's exactly right. So the whole idea is you've got a digital representation of a dollar that lives in the virtual digital world, right? And for that virtual dollar to be stable, it needs to be backed by real world assets. So that's what the legislation does. It gives regulatory oversight of stablecoin issuers to the Bank of Canada. And it effectively allows issuers to issue stablecoins on blockchains, but requires them to keep reserve assets segregated and with custodians like financial institutions. And the reserves have to be either in cash or other forms of high quality liquid assets.
Now, with it if it ends up linked to the dollar, which is more than likely, what's the benefit then for people investing? Why not just stay with the dollar?
Yeah, so stablecoins allow for participation in digital markets. There's a couple of primary use cases. One we've seen already, and that is a stable trading pair with respect to other forms of digital assets like Bitcoin or other cryptocurrencies. We're going to start seeing a lot more assets come on to blockchain technology, so having stablecoins as a trading pair is very valuable, especially in Canadian dollars. What we've been seeing the emergence of globally is stablecoins used as a form of payment, whether that's business to business, B2B payments, or B2C payments as well. We also see stablecoins more and more used in global remittance transactions. So sending dollars, sending the equivalent value of the Canadian dollar around the world. What the technology really allows for is instantaneous settlement or near instantaneous settlement, 24/7, always on technology that's interoperable all around the world. Traditional payment rails just don't work like that right now.
And the U.S. brought in the Genius Act earlier this year. What are we seeing down there? How are things unfolding?
Yeah, so the Genius Act is effectively the Stablecoin Act that was passed in the U.S. earlier this year. We expect it to come into force in 2027. There have been Stablecoin Act equivalents that have been cropping up all over the world over the past couple of years. So this really isn't a U.S.-only phenomenon. We've seen parallel legislation in the EU under the Markets in Crypto Asset, or MiCA legislation, as well as in Hong Kong and multiple other jurisdictions. So what we're seeing now in the U.S. is effectively a ramp-up period where financial institutions, fintechs, corporates, any sort of adopters of these stablecoins are really getting prepared for the digital asset legislation under the Genius Act to come into force so that stablecoins can be issued legally under that act in the U.S. We're seeing similar trends in other jurisdictions, and that's effectively what's happening right now in the Canadian market as well.
And moving ahead, what will be the allure of being linked to the Canadian dollar?
So you got to imagine that global money markets exist right now, whether they're money market funds, FX markets, et cetera. As more and more trading activity, payments activity, et cetera, gets migrated onto blockchain technology, it'll be important for the Canadian dollar to play a role. We also see a lot of different ways that a stablecoin can be built, where the assets can be held, and how the stablecoin can derive trust. We think there's a lot of value that can be derived from the Canadian financial system to have a Canadian dollar-denominated stablecoin available in global digital markets. Given the asset class is so new, having a very soon-to-market, not quite first mover, but rapid follower advantage can be very beneficial to Canadian economic sovereignty.
And going into 2026, investors, what should they be aware of? What should they be doing? Should they be waiting or should they be being more proactive?
My recommendation is to be proactive, talk to counsel, think about your governance and regulatory frameworks that you're implementing, think about your technology and operations. We're going to start seeing more and more stable coins come to market. We're going to see more and more merchants and consumers start adopting these things. So getting out in front of it now, understanding the frameworks, the risk parameters, the integration strategy, and your legal and regulatory compliance obligations will go a long way to be prepared as we see more and more legislation roll out globally, more and more regulations be developed by the Bank of Canada and the federal government to really spell out how stablecoins are going to operate in Canada over the next year.
Okay, we're going to have to wrap it up there, but Adam, thanks very much for joining us.
My pleasure. Thanks for having me.
Adam Gerritsen is leader of the Blockchain and Digital Assets Group and partner at Gowling WLG. Coming up, we're putting the spotlight on entrepreneurship with a young entrepreneur who is trying to bridge the gap in oral care with a new startup. Make chewing gum helps to do more than just freshen your breath. Shares of Lululemon are trading higher after reports activist investor Elliott Investment Management has built a stake of more than $1 billion in the clothing retailer. Lulu is currently facing a strategic overhaul and is searching for a replacement for its CEO, who will step down in January. According to Bloomberg, Elliott has been working with a former Ralph Lauren executive who is viewed as a potential CEO candidate. Shares of Trump Media and Technology Group are seeing a spike after announcing it will be merging with TAE Technologies, a private fusion company, in a stock deal worth more than $6 billion US. The proposed merger would create the first ever publicly traded nuclear fusion company. Shareholders of TAE and Trump Media will each own roughly 50% of the combined firm. The move comes as some companies look for clean energy to power AI data centers. Shares of Micron Technology are surging, that after the chipmaker posted profit and revenue in its latest quarter that surpassed estimates, revenue jumping 57% compared to the year before. Micron also issued an upbeat forecast for the current quarter, citing surging demand and supply shortages that are allowing it to charge more for products. A nice bounce back for the markets right now. The TSX up more than 277 points, 0.89% right now. A lot of this on the inflation data from south of the border, which came in lower than expected, and south of the border, the U.S. markets. They're bouncing back as well. S&P 500 up by almost 1.2%. Dow up by a little more than a half, and the NASDAQ is climbing again. It's up by 1.82%. ToothPod is a new dental hygiene product in the market looking to bridge some gaps in oral hygiene. It's a dental smart gum that cleans your mouth and resets the level of acidity, bringing in good bacteria in the process. For more on the journey from idea to launching just a few weeks ago, we were joined earlier by Bishara Yaghoubian, CEO of ToothPod.
You have your normal gum, which is your xylitol sugarless gum, which is also really good for your oral hygiene. ToothPod is oral hygiene delivered through the mechanism of a chewing gum. So it's not chewing gum, it's a functional gum, which means it's delivering a function via chewing gum. And the function it's delivering is anti-inflammatory, antimicrobial, and remineralizing. So helps rebuild your enamel, it helps decrease gum inflammation and soothe your gums, and it helps decrease bad bacteria and increase good bacteria in your mouth.
And where are you making it? Where are you manufacturing it?
Currently, we have a manufacturer set up in the U.S. as well as Canada. And right now, the first batch is all manufactured in the U.S.
And what are your plans to market it? Where will you sell it? Like through healthcare settings or convenience stores?
The initial route that we're going is through dental clinics. We work with one of the largest dental supply organizations with over 400 dental clinics. So we distribute through those dental clinics first and D2C. So consumers will also have access to it at toothpod.co, on Amazon. And so they'll be able to purchase it. So it's both B2B and D2C.
Can you give us an idea of the retail price?
Yeah, so the initial dental price is this box would be a $20 price. So essentially for your month, it would be a $20 value.
For a month?
For a month, essentially, yes. Unless you're using it for remineralization, anti-inflammatory purposes, then you would essentially buy 2 boxes because you want to chew more than 1 per day.
Right.
And when it's going into retail, the pricing will change because then it's much more consumer friendly. It's packaged differently. It's not packaged specifically for dentists.
Sure.
Because that's the initial packaging you're seeing right now in your hand.
Right. Yeah. And so tell us about some of the investors in this project so far.
We've raised significant capital from wonderful investors across Canada as well as the U.S. We've had Michael Cloutier, who used to be the president of AstraZeneca Canada. We've had League of Innovators, which some of the investors include Michelle Romanow from Dragon's Den, as well as a few angel investors with hedge funds and PE firms, and really amazing backers.
Can you give us a ballpark idea of how much you've raised?
We've had over $450,000 in just non-dilutive funding, and the rest is in dilutive, but a lot of it comes from the Canadian government, universities that have supported us, almost $500,000 just coming from University of Toronto, McMaster University, through Innovation Factory, Dalhousie. There's a lot of different programs that have supported us non-dilutively, almost to $500,000.
So tell us a bit about yourself. You study public health and psychology at U of T?
Yes. I graduated already.
Yes.
Yeah.
Oh, And how did you get into this? How did you come across this product, or what was the genesis of that?
When I was 18, I was at the University of Toronto. I was at an accelerator competition. You had 24 hours to solve a problem. And I was like, okay, what problem do I want to solve in the world? And I started Googling literally top problems in the world. And at the time, number 1 was poverty, number 2 was cavities. It was the most prevalent chronic disease in the world. Periodontitis, gingivitis, cavities. It was almost 100% of the population experiences dental disease. And so I was like, I can do this in 24 hours. Hypothetically, you're trying to solve a problem. And then that was when the concept was birthed. And then I just kept going, because I wanted to work on the problem, because we've had toothbrushes since 3000 BC, but cavities are still the most prevalent chronic disease in the world. That makes me angry, because why is there not, where's the gap? And so that's really why ToothPod was born.
I'm going to try some now, and tell us, what have sales been like so far?
We launched just 2 weeks ago, and in the first 48 hours, we sold over 50,000 units, which was incredible. We had big corporations buy for their offices. We had government organizations that came up to us to do sample testing. We've had a lot of different individuals through our D2C that came in and purchased. So it's been really wonderful since the launch, and sales are still continuing at a really good rate. I feel like most people in Canada have seen our ads run through, and hopefully have seen us in some of the on the internet.
And he was speaking with Vishar Yagubian, CEO of ToothPod. Coming up, we'll look at hot picks in energy infrastructure, including one company that generates 400 megawatts of power for Meta's data centers. That's when we come back. Time now for hot picks in AI energy infrastructure. We were joined earlier by Matt Sally, Executive Vice President, Head of Investments at Tortoise Capital. We kick things off with Williams Companies as his top picks, which he says generates 400 megawatts of power for Meta's data centers.
The key is to get electricity as soon as possible. It's a race for speed to market to power your data center, and they're using, this is very interesting, it's the same generation they use to push gasoline through, or excuse me, push natural gas through their pipelines. They can put on data centers and bring power to these data centers within a matter of less than a year. And they're earning fantastic returns, 5 times multiples for fixed price contracts, fixed rate and fixed volumes. And here's the beauty of it: the same these generations use the same. They're using the same pipelines to basically it fills up their pipelines to run gas through them. So it's a double benefit. It keeps their pipelines full, and they're earning nice returns on these projects.
It's interesting. A yield of about 3.4% on Williams, another attraction here. Targa Resources, tell us what they do. What has caught your eye here?
So they're one of the key players in the Permian Basin, which is one of the most prolific basins in basically the entire world. They have pipelines running all the way from the Permian Basin to the Gulf Coast to get to the water, and they can export product. So they're basically a start to finish solution for producers. And Exxon came out last week and said that they are expecting now to produce 2.5 million barrels per day by 2030, which is up quite a bit. And that's Targa's biggest customer. So pretty exciting for them, and basically locks in their growth prospects.
It's amazing, isn't it, how the hydrocarbon industry has become fueled by AI enthusiasm here?
It is pretty interesting, and the amount of, in particular, natural gas that's going to be needed to produce the power. So basically, you probably know this, but over the last 20 years, at least in the United States, the demand for electricity has not really grown. Looking forward, it's supposed to grow 3 to 4% per year, which may not sound very exciting, but for electricity, that's a big deal. How do we produce that electricity? Nuclear is going to help out, but really it's a function of natural gas. So the amount of natural gas turbines being built, just phenomenal. You have companies like GE Vernova now that are sold out for, the next 5 years for their capacity. So the amount of natural gas that's going to be required to meet the power demand from AI is stunning, frankly.
And then finally, Cipher Mining, CIFR, what do they do, and what's the upside here?
Good question. Most people haven't heard of Cipher Mining. So they're a Bitcoin miner. Bitcoin miners obviously have been around for a long time. They procured power years ago to produce Bitcoin, but now what they're doing is transitioning that power. Again, it's all about speed to market to get electricity. They are turning that power into the ability to resell long-term contracts on high-performance compute. So they're locking up contracts with some of the hyperscalers which in our view is going to allow the company to completely re-rate. Their growth is absolutely massive. It's off its highs quite a bit. I mean, it's still decently for the year, but off its highs quite a bit. And we see really bright prospects for them.
Why has it come off its high? I know some of the AI-related stocks are down. Meta's off its record high as well.
It's all about the concerns about an AI bubble, which I think is, we don't think that's the case. I think there's certain pockets that are a little inflated, but pretty much anything AI or AI infrastructure related has come off a fair bit since its highs. Again, they've still performed really well for the year, but the growth prospects here are just phenomenal.
And that was Matt Sally, Executive Vice President, Head of Investments at Tortoise Capital. Well, Canada's population fell by about 76,000 in the third quarter, a rare decline outside of the pandemic, driven by immigration changes. CTV's Heather Wright has more.
The Prime Minister promised to, quote, get immigration under control, and preliminary numbers from Statistics Canada suggest efforts to curb the number of temporary residents are working. Between July 1st and October 1st of this year, Canada's population decreased by about 76,000 people, mainly due to a reduction in the number of non-permanent residents. The decreases are attributed to record high outflows, with a drop of about 74,000 of those holding a study permit.
We needed to bring our immigration level to a more sustainable level. And at the same time, we've doubled down in Budget 2025 to attract the best and brightest in our country.
This decrease follows record rates of population growth between 2022 and 2023, an immigration policy aimed at part in helping companies fill thousands of empty jobs following the COVID-19 pandemic. But the increase also exacerbated existing challenges with housing and healthcare. While a shrinking population can help alleviate some of those issues, there can be negative impacts too, especially when the changes happen so quickly.
Universities, colleges, builders, they're not prepared for these abrupt changes because population change, I think optimal population change happens slowly rather than quickly.
Experts note this decrease is relatively small, but marks a shift toward attracting newcomers who can contribute immediately to industries like construction and healthcare.
I think refocusing on the permanent paths and making sure that the people who are coming have skill sets that there are jobs waiting for them and there are openings.
More changes to immigration levels are coming, with the federal Liberals vowing to further reduce the number of temporary residents over the next 2 years.
And that was CTV's Heather Wright. Still ahead, today's market movers with Bloomberg's Matthew Griffin. Well, for some movers south of the border, we are now joined by Bloomberg Equities reporter Matthew Griffin. Matthew, thanks as always for joining us. This is quite the interesting merger. Trump Media and a private company working on nuclear fusion, TAE.
Yes, Roger, thanks for having me. And this is one of the most interesting pieces of news today. Trump Media and TAE said that they were going to combine in a more than $6 billion all-stock deal that's going to give shareholders of each company about 50% control after the merger. Today, we've had a really enthusiastic response in Trump Media shares. That stock's up about 40%. This, of course, is the parent company of Truth Social. Donald Trump, the U.S. president, is its largest shareholder through a trust controlled by one of his sons. However, I do think there are some questions outstanding for investors here. One of them is, will this be enough in the short term to turn things around for Trump Media's stock? Those shares have slid this year, still down more than 50% after today's rally. They've tried getting into new businesses. They've announced they're getting into prediction markets. They've bought Bitcoin. But the truth is, this company is unprofitable. It has not found favor with investors this year. So the question will be, will this turn things around? And then another question will be, in the longer run, will nuclear fusion work? This is an unproven frontier technology. It's been done in a lab, but it's expensive. However, the payoff could be extreme in terms of clean, cheap energy. So this will give investors another big name player to watch in the space. And I think there's going to be a lot of attention here going forward.
And it's interesting. This is the largest private company merger, isn't it, to end up going public? Did I read that right?
I actually don't have those.
Don't want to put you on the spot.
I don't have those numbers in front of me. But it is certainly a large deal and a high-profile one.
And I wonder, have we heard from the other side what some of their reasons for it? Why TAE is doing it?
At least in what my colleagues at Bloomberg wrote, I'm not entirely sure that we have a full picture yet from this company. That being said, Trump media has said they're going to invest in the nuclear fusion process, so that'll bring an infusion of cash. Again, this is an expensive R&D process, and that is a source of upside for the company here as it tries to create commercial scale nuclear power. The Trump administration has taken several steps to favor nuclear this year. Trump signed an executive order trying to support the construction of new conventional nuclear reactors in the spring. The Department of Energy has actually created an Office of Fusion to work on nuclear fusion. So this does kind of line up with the administration's efforts to support this technology.
All right, let's stay with energy and Constellation Energy with AI. What's going on there?
Yes, so Roger, you and I have talked a lot recently about unconventional or different ways to play the AI theme, names that aren't NVIDIA or Microsoft. This is another one of them. Constellation, their shares are up about 5% today amid new enthusiasm for AI and also a general rally in U.S. stocks. Constellation is what's called an independent power producer. So like a utility, they generate electricity, but unlike a utility, they can sell it at market prices. Investors expect a boom in power demand due to artificial intelligence. They expect Constellation and Vistra, which is a peer company, to be big beneficiaries. Constellation stock now up about 60% this year. It's become a proxy for the AI trade, so we've seen sharp gains, and this week some sharp sell-offs as investors have questioned valuations, questioned the sustainability of this rally. Today, we're seeing a move to the upside, along with Vistra, along with, for example, GE Vernova. That's a name you and I talked about earlier this week.
All right, yeah, we're seeing the move today after that little negative run. A lot of that, I imagine, has everything to do with the inflation.
Yes,
the inflation numbers that we saw.
Yes, so inflation coming in softer than expected this morning. These are stocks that do trade pretty heavily on economic news, but I would say there is definitely the AI enthusiasm playing a role. You look at the broader market, really strong day in stocks, S&P 500 really rallying, NASDAQ touching highs above 2%. So you've got enthusiasm across the board, real enthusiasm, though, in tech today. It's kind of the perfect storm for a stock like this.
Okay. Matthew, thank you as always, sir.
Thanks for having me.
Bloomberg's Matthew Griffin. All right, let's take a look at the markets and see how things are shaping up on the TSX. We'll start there. And of course, as we were talking about, all the markets in the green right now. TSX up by almost 0.83%. And let's take a look at a couple of the notable gainers right now, or a few of the notable gainers. And one of them, Orla Mining. It's up 3.29, almost 3.3% on the news of a 2-kilometer-long gold trend extension at Musselwhite. That's helping fuel that one. It's a significant gold mineralization is how they're calling it. And Cameco up 4% on the news. It's raising its annual dividend by 50%. So shareholders will be happy on that one. And the other one that's doing well, ATS Corporation. It is up, what's it up now? 3.86% on the news. It's buying back up to 10% of its shares. Also announced that just recently that it has a new chief executive officer, Doug Wright. Laggards, one we want to talk about, BRP. It's down 4%. Of course, that's because the maker of recreational vehicles, motors for boats, things like that, the Australian competition regulator blocked the sale of Telwater to Yamaha. They intend to keep Tailwater moving as normal. One other note before we get out of here. Lululemon up 5% right now in the report of Elliott Management having a stake and wanting to possibly push a new CEO. And that wraps up this edition of Trading Day. I'm Roger Peterson. Thank you very much for joining us.